Okay. Well, thank you. We will wait for a few folks to join us, and then we will begin our April town hall here at Copperleaf Financial. And I will begin by saying welcome. Thank you for joining us today. My name is Michael Thompson. I'm the partner and senior wealth advisor here at Copperleaf. And today our topic is foundations. So we're going to be talking about the charitable tool which foundations represent from a planning perspective to our clients. And today my guest is Jessica Donahue from Foundation Source. And Jessica has been with Foundation Source for 6+ years, I think. Jessica is the senior managing director. Jessica, I believe, is a graduate of Georgetown and Columbia, and truly an expert in the world of foundations and foundation planning. So thank you for joining us, Jessica. I'm really thrilled that we can have this conversation today. Why don't we start off, if you don't mind, by telling us a little bit about the organization, about Foundation Source. So what is Foundation Source, and how did you guys get started? Give us a little background.
Thank you very much. I'm really happy to be here today. It's a great opportunity to talk about private foundations. So Foundation Source has been around for over 20 years. We are a outsourced foundation management company. So what we provide is outsourced management solutions for private non-operating foundations. About 20 years ago, there were 4 families in Connecticut who were looking for this solution. They were looking for these services, and it didn't exist. So what they decided to do is they decided to build it from scratch. Flash forward about 20 years, we currently work with about 2,000 private foundations. That translates into about $22 billion of charitable assets. We do not manage money, and we do not custody assets. We really provide everything else that a private foundation needs to operate efficiently and compliantly and help the donors really achieve the things that they set out to do from a philanthropic perspective when they went down this path in the first place.
And well, that's great background. Thank you for telling me. Certainly a robust organization, well suited to help individuals either manage an existing private foundation or start a new private foundation. And I think of private foundations as one of the tools in our philanthropic planning toolkit, a very important one, and certainly can be a core tool. But I think there are a lot of myths around private foundations, and maybe we could spend a few minutes kind of talking about, seeing if we can bust some of those myths.
Yeah.
Yeah. So first of all, I think I think the first myth that I think of, and you're probably, I know you're much more familiar with these than I am, but the first one that I think of is, oh my gosh, I've got to have millions and millions of dollars to establish a private foundation, and it's going to be very complicated and very expensive to set up and administer and things like that. I think that's the kind of the primary myth that I hear. Is that kind of the first one that you guys think of, and what do you think about that?
Absolutely. So typically when people think about private foundations, they automatically think about Buffett and Gates, maybe the Ford Foundation. But the reality is those are really kind of the outliers. Those are not the norm for private foundations. The median private foundation in the United States is about $1 million.
Yeah.
About half of all of the private foundations have been set up in the last 10 years, and people are using them as a piece of their estate plan. They are using them in the context of a liquidity event, or they are using them with the intent that they're going to fund them up on an annual basis. So if you want to think about like a C-suite executive that gets an annual stock allocation. But it really can be used as a cornerstone or as a component part of somebody's philanthropic planning, and their overall wealth and estate planning.
So, so what I'm hearing is it can be a core component and doesn't need to be complicated. Certainly doesn't need to be a situation where there's, Bill Gates or Warren Buffett money involved.
Right.
A more modest estate or a more modest financial situation may well warrant exploring a private foundation and whether that can serve as part of or a core of the overall financial and philanthropic plan is what I'm hearing. So,
Exactly.
yeah.
Exactly.
And I imagine that, I think we'll get back to some myths in a minute, but I imagine that the private foundations can also be used in concert with other charitable tools or philanthropic tools. And you talk about how the bulk or the majority of private foundations have come into being over the last 10 years. It's interesting to me because that's also a time period where we've really seen an explosion of donor advised funds, right? But private foundations have continued to grow during that time period too. So it must not be a situation where I sometimes hear people say, well, it's sort of either or. Either I have a donor advised fund or I have a private foundation, and neither should they meet, right?
Right.
So how can a private foundation and a donor advised fund sort of coexist, and how might they coexist within a philanthropic plan?
Absolutely. So I would say a large portion of the people, the donors that we work with, will have a private foundation as well as a donor advised fund. And whether or not that donor advised fund is one of the big kind of commercial donor advised funds like a Schwab or Fidelity, or a participation in their local community foundation, which is also a donor advised fund.
Yeah.
We see the two vehicles as working hand in hand very well. People can do a couple of different strategies, just for example, in how they work together. Sometimes people will have their private foundation as being very, very mission focused. So if their private foundation is all about saving the habitat for the wallabies, but then they also want to make a gift to the local symphony, but they don't want to offer a mixed message out of the foundation, then they can make that gift to the symphony out of the donor advised fund. In certain cases, private foundations will create donor advised funds for its board members, and on an annual basis, the private foundation can grant to the donor advised funds for the board members as compensation or as a thank you for their work on the foundation. And then those board members can make their own gifts out of the donor advised funds to the things that are important to them personally, which may not necessarily be the same things that are prioritized by the foundation. Similar strategies can be used for family members as well. So the joint work of the family is done through the foundation, but then the foundation allocates to the family members' donor advised funds to let them pursue their personal philanthropy as well. So there's a lot of ways where the two entities really work hand in hand very well.
I love that. I love those strategies where the private foundation is using a charitable donation to a donor advised fund as a form of thank you or compensation, remuneration, not exactly remuneration, but compensation for board participation or family participation. I love that strategy. That sounds great. And I also know that, or I believe you helped me understand this. And by the way, a note to our participants: if you have questions, please enter them in the chat. We're happy to take your questions along the way. And just another note that I neglected to mention at the beginning: this session is being recorded, so you can share it with your friends, and we will have it posted on our website likely sometime next week. So back to the donor advised fund private foundation. issue. I know that there are also some strategies whereby, and you talked about how a private foundation can actually make a donation to a donor-advised fund, but it can't go the other way. Isn't that correct? We
That is
can't have a donor-advised fund make a contribution to a private foundation. So in a way, the private foundation can serve as a really useful tool within that combination, but it can't go the other way. Can you talk about that a little bit?
right. So a donor advised fund, by definition, as its legal entity, is a public charity.
Mm-hmm.
So once the funds go into a public charity, they can't go, the IRS considers that kind of going backwards. So they can't go backwards into a private foundation. They can go, however, from a private foundation to a donor advised fund. Those private foundations, as y'all may know, are required to distribute 5% per year of their average assets. Those contributions to donor advised funds count as part of the foundation's 5%. So lots of people, another strategy where they work together is if you get down to the end of the year in your private foundation and you might have a little bit left over that you haven't made that final granting decision about yet, you can move those funds to a donor advised fund and have it count towards the 5% of your private foundation.
Yeah, and in a way still have control, in air quotes,
Right.
over your philanthropic dollars for to accomplish your strategy, whatever that philanthropic strategy is. So I like that. I like how they work in concert so well together. Let's go back to myths for a minute, and I know that one of the myths that I've heard about, and again, you tell me some of the myths that you've heard about, but one of the myths that I've heard about is that it can be very complicated and take a long time to set up a private foundation. I've got to hire a team of lawyers and accountants and other folks, and it's going to take me weeks or months to kind of get this thing set up. Is that true or not?
Not necessarily, no. So a private foundation is an independent legal entity. It can be set up as a corporation or a trust. If you ask Foundation Source to set it up for you, and we absolutely can establish a foundation for somebody who does not have one, we're going to set it up as a Delaware corporation. We can get it done in a matter of a few days. We can also help donors who want to work with their attorneys and have them set up either as a trust or in another state. But if you ask us to get it done, we'll set it up in Delaware, regardless of where the donor lives. And it can be done in just a matter of a few days. And then for the ongoing, and I think this is one of the reasons that people have somewhat shied away from a private foundation as a tool, is the question about, okay, well, I can set it up, or my attorney can set it up for me, but now what? Then what do I do with it? And people in general don't go down the philanthropic route because they want to spend their spare time reading the IRS codes. Right. Foundation Source provides an outsourced management solution. So not necessarily just grants management, but foundation management. So we can track your assets. We can tell you what your 5% distribution requirement is. We'll track where you are relative to it and provide all the compliance and administration and back office and tax services necessary so that as a donor, all you have to do is really focus on your philanthropy. You really have to focus on the things that are important to you, and we can take care of all of that, the things that have to happen kind of behind the curtain.
So I love the sound of that. And that's one of the reasons I was excited about having you guys on today was, people certainly can go the route of setting up their own private foundation, working with an attorney or a team of attorneys and accountants and philanthropic advisors and independently establish all the infrastructure and administrative components to manage their private foundation. But where you guys really come in is kind of the one-stop shop for that. One doesn't need to go reinvent the wheel. You guys have done it thousands of times. You've got how many hundreds or thousands of foundations that you've created over the years, and you've got the infrastructure to do it. You've got the legal expertise and the accounting expertise to get it established and actually to operate it, so that philanthropists or individuals that are philanthropically minded don't have to go through the hassle, as you say, of
Right.
kind of what does it take to operate this thing. You guys make that an easy process. So what's the typical situation look like that you guys experience? So if somebody comes to you, I imagine it kind of runs the gamut and is kind of all over the place, but is there kind of a common situation whereby you might see someone coming to you and asking for your help? What might that look like?
Right. So it's really interesting. About half of our introductions come through financial advisors, trust and estate attorneys, CPAs, who come to us on behalf of their clients and start to explore this idea of a private foundation. The other people usually find us online, but it's the idea is people are looking for philanthropic resources. In general, when a financial advisor starts a conversation with us, they are interested in providing choices to their client. So when they get into that conversation about philanthropy, they want to make sure that their client is aware of all of their options. And working with Foundation Source, a private foundation really does become a viable alternative for more donors, because you don't need many millions of dollars and you don't need your own team of attorneys. So when we start the conversation, most of these conversations are usually around philanthropic options. I spend a lot of my time talking to people about what might work best for them, whether it's a private foundation or a donor advised fund or some combination thereof. We also do talk some about the charitable trusts, but we don't get as deep into the split interest vehicles. So that really is kind of the beginning of most of these conversations, is somebody is thinking about a charitable vehicle, and we go through the options with them and think about things. How are they going to fund it? How are they going to fund it in terms of what types of assets are they going to use? How are they going to fund it in terms of a timeline? Yep. Who are they looking to have participate in the process? What is their timeline in terms of longevity for the entity? Mm-hmm. And we'll talk through these various decision points and help them make a decision about which or how many of these vehicles they think they're going to start with at this point. Mm-hmm. If they do choose to work with us, if they do choose a private foundation, the next step for us, if they don't already have a foundation, is for us to set it up for them in Delaware. We do that whole process internally, so all the state and federal filings, the bylaws, all the documentations that go along with it, the EIN number. And then we also do what's called the 1023 application, which is the request for not-for-profit status from the IRS. Mm-hmm. The IRS right now is taking about 6 to 8 months to respond to these requests for not-for-profit status. However, one of the good things about working with Foundation Source is, knock on wood, as of today, over 20 years, we've never had one decline. And working with us, you can go ahead and start to use your private foundation in anticipation of the foundation's letter of determination. So what you get back from the IRS is called your letter of determination. So you can go ahead and fund your foundation and take the appropriate tax deduction in the current year. You can start to make grants while we wait for this IRS response.
Wow. how does that actually work? I mean, I think if I were not working with Foundation Source and I were doing this on my own, I would be incredibly nervous about proceeding without that letter from the IRS letting me know that it's okay, that I've actually got approval to operate a charitable organization. So how do you guys do it, and how does that work?
So we are very narrow. We only work with private non-operating foundations. We are very specialized. And what that does is that lets us really be experts in our field. If you read the instructions, if you get the 1023 form from the IRS website and you read the instructions are going to tell you that you need to allocate over 100 hours to complete that form.
Wow.
So in lots of cases, people tell us that, that's one of the biggest benefits that they get from, working with us at the beginning of the process is how well we know this process.
Mhm.
And what the form needs to say and how to get it through the IRS. And we really love when people come to us, and sometimes people come to us with very specific ideas about their philanthropy, and sometimes they really don't know what they want to do at all. And this is also part of filling out the 1023 application, because that includes a general statement about the foundation's philanthropy. So it's an interesting part of the process to go through, and one where it really is useful to have an expert in your corner.
I think that's really interesting, and you brought that up a few minutes ago when you talked about the interface or the utility of using donor advised funds with private foundations, and how the donor or the owner of the private foundation may want to make a donation that's outside the scope of the mission of the private foundation.
Mm-hmm.
And I think that's so important, and many people really may struggle with that and may not realize the benefit of having a clear mission, and how the private foundation, it's really at its core, is designed to be mission driven. What do you do with people that come to you and say, I've got a philanthropic desire and I've got this intense tax need, but they really don't have a clear idea about what's the intent, what's the purpose of the foundation? How do you solve that?
Right. So it's really interesting when somebody comes to us that way. And one of the things that we tell them is not to panic, right? That it is one of the benefits of a private foundation is that it is a very evolutionary kind of entity. So the 1023 statement, or the 1023 application to the IRS, and the mission statement are two entirely separate things.
Mm-hmm.
So the 1023 application is this snapshot of the day, of what the foundation is planning on the day. It is not a limiting document in any way. So to go back to my earlier example, you can say in your 1023 application that I am all about saving the habitat for the wallabies, but I can still donate to the symphony. Those two things are not in conflict with each other. The mission statement, in contrast, belongs to the foundation and to the family and to the board members. And it is a very evolutionary concept. And we really expect our clients to work with their mission statements and review them over time. So we can help our clients. And so they'll come to us and they might have an idea and say, well, I'm interested in clean water. All right, well, what does that mean to you? Are we talking about a specific body of water? Are we talking about the Great Lakes, or are we talking about Long Island Sound? Are we talking about the issue with plastic in the oceans? And help them drill down from this very general concept into an action plan.
Mhm.
And all of this can be encapsulated in the mission statement. And then we encourage people as part of best practice to go back to that mission statement on an annual basis and say, okay, well, this is what we set out to do. This was our plan. This is maybe what we actually did, right? And is what we did, is it better than what we thought we would do? Is it different? And so, and how do we use that to inform the future of our giving, right?
Yep.
You
Yep.
know, did we come across other things that had a bigger sense of urgency for us? Or did we find organizations who were already doing what we were setting out to do? You know,
Mhm.
what did we learn over the course of the year? And how do we use that new knowledge to, you know, maybe alter our definition of success, right? How do we go forward in a better way based on what we learned this year?
That's great. Does the board then update the mission statement or amend the mission statement so that they're clarifying it and getting clearer over time?
Yes, absolutely. Mission statements can and should change over time.
Yep. Good. Let's talk a little bit about business owners and the opportunity for businesses. We often see businesses sort of in the throes of succession planning and kind of keenly interested in some tax savings around, maybe limiting capital gains from a business sale or a business transition. Do you see those types of situations, and how do private foundations what's the role of private foundations potentially that you see in those business transition cases?
Right. That's a great question. And it can be answered in kind of a couple of different ways. There's the tax planning approach, right? So thinking about as you're coming up to a transaction, a business sale, and you're planning your philanthropy, does it make sense to go ahead and pre-fund a charitable entity with some portion of the stock prior to the sale?
Yes.
I will say there's a few considerations that you have to keep in mind. So if we're talking about privately held stock, if we're talking about a private company, the upside of working with a private foundation in this scenario is that you're not going to have any sort of arbitrary timeline put on you. For those of you who are, seasoned entrepreneurs, you know that these liquidity events don't necessarily happen on the schedule that you anticipated.
That's right.
So a private foundation can be funded with privately held stock, and does not have to be any sort of preset timeline for the liquidity event. You will need to be cautious to fund the stock into the foundation before the price is set, right?
Yep.
So it
Yep.
needs to be early enough in the planning process so that the stock gets transferred into the foundation before the price is set. And there needs to be sufficient liquidity in the foundation to cover foundation expenses and any grant making requirements in the lead up to the transaction.
Yep.
So there is some planning that has to go around it.
Very important planning. Yes.
Yes, very important planning, but it can be a very useful tool.
Yep.
The other piece of it, which is the more personal piece, is that we'll often see entrepreneurs who use their philanthropy as kind of a second career or a third career or a fourth career, depending on who you are.
Right.
But what it does is, if in the process of selling the business and moving on, you've created this kind of charitable war chest, which lets you repurpose your time and your talent in a different way. So we have one client who was an engineer by training, went through his career. When it came time for him to be in a position that he could step back, we helped him create his foundation. And what he does is he travels to developing countries. His foundation pays his travel expenses and his living expenses. And he goes and he lives and he helps communities build clean water facilities. So he's gone back to his engineering. He gets to use the skills, do the things that he loves to do. And he is basically the philanthropy of his foundation.
Yep. I love that story, and I think private foundations can be such powerful tools for business owners as they, if they do proper prior planning leading up to the business transition. I think it can be powerful not only for the tax considerations, but as you said, and certainly for the philanthropic intent, but also create opportunities, lifestyle opportunities to the future. So many, in our practice, we really think about planning as a holistic lifetime endeavor, and a business transition like a retirement can often leave a gap to the future. What are you going to do with all this time now that where you're used to spending 60, 70, 80 hours a week on an enterprise? What are you going to do now? So I think I love your example. You're absolutely right. If the private foundation can serve some of that need, I think that's incredibly beneficial, and we certainly have seen it. Let's talk about the makeup of kind of the individuals that are involved in a private foundation. And sometimes we think that there's a lot of infrastructure or staffing involved, or administrative kind of support involved in the foundation. But I also wanted to, I guess, or ask you to talk about kind of the idea of the board of directors, or and that kind of thing. Who are the essential personalities? Who are the essential participants in a foundation, and what does it typically look like? What's required? Kind of build that out for us.
Absolutely. So I mentioned earlier in the conversation that when Foundation Source sets up a new foundation for a client, we set it up in Delaware. One of the benefits of Delaware is that Delaware allows for a single director corporation.
Nice.
So one individual can be the entire board of their foundation. They can hold all the decision-making power, and really direct the foundation the way they want to direct it. We recommend that, if somebody wants to have additional people on their board, that they have a maximum of 7, and that you have an odd number so that you don't have a stalemate. Many of our clients will have their family members on their foundation with them. They view it as a multi-generational endeavor. So they will bring their children onto the board. In Delaware, you have to be at least 18 years old to be a technical board member. Children that are younger than that can be advisory members of the board. Some foundations have junior boards. And there's all sorts of ways that we have collaborated with our clients to bring that next generation, that younger generation in, and really make them feel like they are invested and part of the foundation. Lots of times families will task the younger generations, the younger members, with choosing something that's important to them and doing the research and pitching to the foundation an organization that they would like to support. They can also be given what we call grant certificates, which are the equivalent of a gift certificate, which allows them to log into the foundation portal and make a grant completely unilaterally to an organization that that appeals to them. And since Foundation Source is taking care of all of the compliance, nobody has to worry that they're going to make a grant to an organization that either is, out of favor with the IRS or in some other way inappropriate for the foundation, right? And what this does is it really lets them be personally invested in the foundation. Beyond that, really different families, different groups approach it from all sorts of angles. Some families give each family member a set dollar amount, and earlier I talked about allowing family members, putting it in their donor advised fund and letting them grant it out of the donor advised fund. Some foundations do that directly out of the foundation. So every family member has a certain dollar limit that they can grant every year for their own purposes. And then there's a certain percentage that has to be unanimous among the group. Some families have to vote on everything. Sometimes it has to be unanimous. Sometimes it's a 2/3 majority. And, those are the things that we can help families kind of develop as they go through. And what do those working relationships look like? And how does it work? And what are kind of the best practices so that family members feel heard and feel appreciated and really feel like they have a voice in the joint family philanthropy?
Yeah. And what about compensation? I often hear people, ask questions about, can I put members of my family on the board of my foundation, and can they receive compensation for their time, for the time that they spend, working on the board? How does that work?
So you absolutely can pay staff, you can pay family members for their work on the foundation. In general, we don't see private foundations paying salaries until the assets of the foundation are at least $5 million.
Yep.
So if you kind of look at the math behind that, so private foundations have a 5% distribution requirement. 5% of $5 million is $250,000. You need to make sure that of your annual distributions, the foundation is doing its charitable work and not just paying a family member for their work on the board. Beyond that, it has to be a real job, right? They have to actually work for the foundation. And often we'll talk through with people who want to pursue this. Who is it that's going to work for the foundation? What are their skills and qualifications and their interests? What do they bring to the table? And how does that relate to the mission of the foundation? And absolutely, it can work. We have foundations where a family member is a trained nutritionist, and the foundation is very focused on food insecurity. And those two skill sets, really go hand in hand. So absolutely it can be done. It just, like most things, it needs to be done the right way with a little care and consideration. On the flip side, if all you're thinking about is a stipend, so if I want to pay everybody on my board a stipend of $5,000 a year for their participation in the board meetings,
Right.
that is a fairly easy administrative task and can be done with little work.
Interesting. Again, a nice feature and a nice benefit of a private foundation, and how operating a private foundation or utilizing a private foundation can be very impactful to an overall financial and philanthropic plan. Talk to me about time, and what I mean by time is perpetuity, I guess. You talked a little bit about that a minute ago, but how long can a private foundation be in existence?
A private foundation is, by design, in existence in perpetuity, as long as there is funding in it. And many families go down this private foundation route with the idea that it's going to be a multi-generational exercise. So they are going to create the private foundation. They're going to fund it. They're going to shepherd the investments prudently. They're going to add to it over time, and they're going to bring in their children and their children's children and really use it to instill a culture of philanthropy within the family, to make sure that everybody understands that it's their responsibility and they feel that it is their responsibility potentially to leave the world a better place than the way they found it, right? Alternately, some foundations are created with a very specific sunset horizon. So some foundations will come into being and say, you know, we have 20 years and we have this issue area. And over the course of 20 years, it is our plan to try to achieve these preset goals. And we're going to expend this pot of money in furtherance of these specific goals. And it's both are very valid approaches. And it really just depends on the goals of the people who are behind it.
Yeah. It's so interesting because, you know, I was at an event a couple of weeks ago and talking to the director of a nonprofit who is, I thought they were fairly unique. Their mission was really to put themselves out of business, and they had a timeline. They're going to be done. They're going to have solved their issue and be done within 5 years, which I thought was very incredibly bold and
Yes.
A great approach. So there are multiple approaches to addressing issues, and certainly nothing wrong with being aggressive about trying to get that work done within a time frame. I think that's a great thing. Let's talk about sort of staff and administrative duties. So obviously Foundation Source is there to perform a lot of the administrative duties for those who choose to have you do that. But what are some of the administrative duties where staffing may be appropriate for a private foundation? And, you know, what's that look like?
Right. So Foundation Source is an outsourced administrator. So we take the lead on compliance, technology, administration, bookkeeping, and tax services, right? But one thing that we are not is we are not program managers. And so to the extent that above and beyond those administrative needs, a private foundation might find that it wants a staff person, might be a full-time staff person, a part-time staff person, to do things like read application essays. If the foundation wants to create a scholarship program, there's going to be a lot of applications to sort through and read. So they may want a staff person who will take the first cut of scholarship applications or the first cut of grant applications. They may also want a staff person who does research on their behalf to help hone the direction of the foundation. So to go back to my clean water example, say they decide that what they're really worried about is this issue of plastic in the oceans. They might have a staff person whose job it is to gather all that research and all that activity that's happening out there in the world in terms of fighting plastic in the ocean. Yep. And put that together and help the foundation use that information to direct themselves, right? There's a lot of information out there. There's a lot of people doing a lot of work. You don't want to end up reinventing the wheel, right? If somebody's already got it and somebody's already doing it, you don't want to expend a lot of your resources duplicating effort. So they may want a staff person for that type of a function.
Yep. Grants, you know, some private foundations, I think, and maybe all private foundations. I don't know, what is the approach that you see private foundations taking to grant applications? Is it common? How many sort of make public or sort of open up potential grant applications to kind of the universe and take and accept applications kind of universally, and how many don't? How many just make their own decisions and
Right.
don't take open grant applications? What's that often look like in your world with your typical private foundation?
Right. I would say more foundations make those grant decisions internally.
Yeah.
So they have an idea of the issues that are important to them, whether or not it's geographically based, right? Whether or not they're going to focus on their hometown or a certain issue area. But I would say more foundations are really making those decisions internally. Now, they may end up in kind of a hybrid approach where they invite organizations to apply, right? So they know the type of organization that they're interested in funding. They may create their own short list internally and then invite those organizations specifically to apply.
Yeah.
Alternatively, and it's not uncommon, but less common, are foundations that open themselves up to receive grant applications. Most will have either some sort of eligibility questionnaire attached. So, where are you geographically? When were you formed? Are you in good standing with the IRS? How many people do you see in your audience that you serve? To make sure that the grant applications that they receive are appropriate and relevant to the question that they're asking, right? So
Yep.
they will in some way narrow the window for potential grantees to make sure that they're getting grant applications that fit their parameters.
Interesting. And I imagine the administrative requirements for each of those approaches is going to be unique and really depend on going to inform the infrastructure needed to support that
Absolutely.
activity, right? Let's talk a little bit about taxes and some of the tax benefits. Folks may not be aware. They may have kind of a general understanding that maybe there can be tax benefits to setting up a private foundation,
right?
But let's walk through those. Can you kind of run through a list of what are the potential tax benefits for a donor that might be considering a private foundation?
Absolutely. So a private foundation is a charitable vehicle. So a donor gets a current year tax deduction for contributions to their private foundation, just like any other contribution that they make. One of the things that we'll often hear is that donor advised funds have a better tax deduction. That's a little bit misleading. Tax deductions are based off your AGI level. So if you're talking about a cash contribution to a charitable vehicle, you can deduct up to 30% of your current year's AGI for a contribution to a private foundation. You have a higher AGI limit when you're contributing cash to a donor advised fund. It's a 60% AGI limit, so up to 60% of your current year AGI. You can also split in a current year. If you've got a really high AGI year, you can split and you can do 30% to a foundation and 30% to a donor advised fund. I will say that even in kind of, the rarefied world of private foundations, we really do not often see people hitting their AGI limits in a current year.
Yeah.
Sometimes if it's that sale of a business, if you have a really high AGI year, people may be looking to really hit that AGI limit on a given year, but it doesn't happen all the time. And if you do hit your AGI limit, you do have a 5-year carry forward. So if you do have this 1 year of kind of a spiky income year, if you can't take your entire tax deduction that year, you can take it up to 5 years down the road. So that's for cash donations. If you're contributing marketable securities, it's a 20% limit on your AGI. So same thing, current year tax deduction, just like any other charitable contribution. Mm-hmm. One thing to note is that if it's privately held stock, paintings, land, one of the great things about a private foundation is it can accept almost any store of value as a contribution to a private foundation. The flip side of that may be that you're going to get a cost basis tax deduction. So if you buy a Picasso at a yard sale for $10 and you then take it to Sotheby's and they validate it as a true Picasso, your cost basis is $10.
Right.
So you can put it in your foundation. You can either lend it out to a museum or you can sell it for many, many millions of dollars. But your tax deduction is going to be the $10 that you paid at the yard sale.
Yep. Yep. And that holds true of privately held company stock too. So
yes, it does.
So that's a consideration in tax planning for those business owner issues.
Right.
What about other tax considerations? What about once assets are in the foundation, any tax benefits there? I mean, I kind of like your Picasso example. Maybe I don't get much of a tax deduction, but moving forward, it might be a big deal.
Moving forward, it's a great deal. So if you kept your $10 Picasso and sold it as a personal asset, you're going to pay a big chunk of that in taxes. If you give that $10 Picasso to your private foundation and then sell it, your tax rate on the gain is going to be a flat 1.39%. So private foundations do pay what's called excise tax. It's a flat 1.39% on realized capital gains, interest and dividends. And that is also net of investment advisor fees. So for you advisors, if you, the fees that you get paid by your foundation are going to be netted against your investment income every year before that excise tax is calculated. So selling assets within the foundation can create big tax savings.
That's a really good thing. That's a really good thing. And what about transfer taxes? What about are there any estate tax advantages then? I would imagine that there are, but how do you guys think about that?
So having a private foundation as part of your estate planning documents can be a very useful tool. You can have the foundation all set up. Quite often people will set it up and have it minimally funded. But then it will be in their estate documents as the recipient of the remainder of their estate. So after all the other bequests are made, the remainder goes to the private foundation. And that can be a great estate tax strategy. Excuse me. What that can do is really help be there to buffer, people will try to actively manage what their estate tax liability is going to be. And the private foundation can be a great buffer for that. And
does the private foundation ever the recipient of retirement plan dollars in an estate situation like that? Does that ever work?
Yes, that works well in an estate situation. It's if you try and fund your private foundation with your retirement plan dollars during your lifetime, you're going to have to take it as ordinary income and then fund it into your foundation. Right. But that goes away if you have it as part of your estate.
Yep. So as part of my estate, if the private foundation is the beneficiary of my IRA at my estate, that may be saving not only estate tax, but it may be saving income tax for somebody down the road.
Absolutely.
Yeah. What else? So, Jessica, we've covered a lot of ground. We've covered a lot of territory in our hour today. We're getting close to our time. I don't see any questions, so we'll carry on. But are there things that we haven't talked about that you think are important for us to share about the benefits of private foundations?
Right. I really think that the one idea that I'd like people to maybe take away from all this
Mm-hmm.
is that a private foundation is an option and that they should consider it as an option for their own philanthropy, for their clients' philanthropy, as they are in that planning stage. And that there are resources like Foundation Source that make it easy for a donor to have a private foundation, and that when you're presenting, when you're working with clients, it's always the best idea to give them choices, right?
Yes.
And they may not realize that a private foundation is an option for them. And so to bring it into the conversation really opens it up and gives you that opportunity to explore what's really important to them and how they feel about their philanthropy and bringing their family into it, and how all of this is a part of the long-term planning for their family. And that, even if you aren't an expert in private foundations, there are, we can be a resource for you. There are lots of places that you can find answers to questions. And I would just encourage people to keep it as part of their toolkit and let their clients make the choice.
I think I like that message, and I think the way I think about it is, of estates over a certain size, a private foundation certainly should be considered as part of one of the tools in the overall plan. Can it work? Does it make sense? Does it help further the overall mission of the client, their philanthropic intent? How does it integrate with their tax planning, their legacy planning, their estate planning? And certainly should be included as a tool to consider because of its many benefits, and because you guys, Foundation Source, can make it really easy to do. So I appreciate that. Well, listen, we're going to wrap up. We're pretty much at the end of our time. I want to thank you, Jessica Donahue, for joining us today from Foundation Source. Let people know that next month, our town hall is going to be on the science of sustainable investing. Our guest from Dimensional Fund Advisors is going to help us cover some of the climate science around sustainable investing. And in the meantime, have a happy April. Hopefully everybody got through tax day yesterday. And once again, Jessica, thank you for joining us, and have a fabulous rest of your day.
Thanks for having me.